Welcome to today's market report. Investors generally shied away from Risk Monday as turmoil from Afghanistan, fresh concerns about the economic slowdown in China, and the spreading coronavirus Delta variant put the brakes on last week's equities surge. Wall Street's major indices were all down around midday Monday after notching fresh record highs last week, with the tech sector taking the brunt of the losses. At the same time, safe haven investors such as gold, the dollar, and the US Treasuries saw increased investor demand. The Dow Jones fell 0.04%, S&P lost 0.21%, and the Nasdaq dropped 0.73%. The MSCI index fell 0.46%. It's undeniable that there are concerns looming that could spook some investors. Delta, weak growth abroad, and conflict in Afghanistan, according to E-Trade Financial. While there is no shortage of the factors that could be weighing on traders, keep in mind short-term volatility is par for the course when the market continues to notch record highs. The dollar ticked up against major currencies, rising 0.1% to 92.623 after dropping to a one-week low on Friday. In more risk-off moves, US Treasury yields slipped as demand for safe haven US bonds ticked up. Benchmark 10-year yields fell to 1.25%. Muted investor appetite kicked off the week after figures on July retail sales, industrial production, and urban investments in China all missed forecasts, a trend that is only likely to get worse given the recent tightening in coronavirus restrictions there. Further adding to dull investor sentiment was the sudden collapse of the Afghan government and what it may mean for political stability in the region. Concerns that a resurgence of coronavirus cases could weigh on travel demand pushed down oil prices. Brent crude was down 1.27% at $69.69 per barrel. US crude was down 1.39% at $67.49 per barrel. Spot gold ticked up to $1,786 per ounce, while the gold futures were up 0.6% at $1,789.10 per ounce. On the FX front, GBP USD is down 0.17% on the day as the greenback makes back some ground following a dismal performance at the end of last week's trade. Cable is trading at 138.41 after falling from a high of 138.78 to a low of 138.27. Risk appetite in global markets is weak at the start of the week following poor Chinese data, and the US data on Friday showed a plunge in US consumer confidence. The survey showed US consumer sentiment dropped sharply in early August to its lowest level in a decade. The fall was one of the 6 largest drops in the past 50 years of the survey, and it underlines a broader concern at economic growth as virus cases rise around the world. Meanwhile, a sharp slowdown in China's factory output and retail sales growth suggested to the market the world is a long way off from recovering from the coronavirus economic slowdown. As a consequence, the US dollar has edged higher and the riskier currencies such as GBP generally lost out. Bullish sentiment on GBP has gotten somewhat thinner of late as traders ponder as to whether the Bank of England's optimistic outlook given the recent virus wave will be sustainable. Investors in this respect will be very keen to scan this week's calendar for domestic clues that could offer some clarity on the matter. July's job data on Tuesday may see a tick lower in the unemployment rate as a supportive factor for the pound as the economy opens up. Inflation data on Wednesday will be important, and the focus will be on the headline CPI year-on-year outcome. Finally, retail sales for July will be eyed for signs that the Delta variant took its toll on the economy. Meanwhile, the US dollar has firmed ahead of the Fed commit minutes this Wednesday that will be scanned for signs as to when the Fed might contemplate tapering its bond purchases. Euro-dollar failed to build on Friday's gains on Monday, trading sideways below 118, the key figure, during the American trading hours. The pair was down 0.15% on the day, waiting for the second quarter GDP data from the euro area tomorrow. Investors expect the eurozone economy to expand by 13.7% on a yearly basis. The latest CFTC positioning report revealed that net loans in the euro declined to the lowest level in more than a year. GBP/EUR is trading steadily at 117.
This is today's market news. Thanks for listening. We'll see you next time.